1280 on the AM dial. And of course, you can catch us streaming at WNRI.com anywhere on the planet that you have access to the internet. I want to thank you for tuning in again this week. I also want to thank Compass Title and Escrow for being one of our sponsors. Anthony Betancourt and his crew do a great job taking care of buyers and sellers of residential and commercial real estate. And they also do other things because they have attorneys and paralegals on staff. So if you are interested in working with a great group of attorneys and paralegals, all you have to do is give them a call. They're right in Lincoln, and they're in Blackstone Valley Office Park. Their phone number is 401-379-7770. That's Compass Title and Escrow, 401-379-7770. And of course, Vern Rainville. Vern Rainville is he's licensed by the state of Rhode Island to be a public insurance adjuster. That means if you think you have a claim because you have ice dam or you had pipes freeze or something happened with all this crazy weather we've had, tree blew down, and you're not sure if it's covered by your policy, give Vern a call, 484-300-8495, before you call your insurance agent or your insurance company, because every call you make to them is documented, and it could be a strike against you, when it comes time to renew your policy. So you want to give Vern Rainville a call first, 484-300-8495, because he would work for you, not the insurance company. He looks out for your best interest as the property owner, not the insurance company's best interest. And I've said this before, I've had friends, family, and clients work with him, and he identifies more things that the insurance company needs to pay for than they would have ever thought that he did. So please give Vern Rainville a call, 484-300-8495, and he will take good care of you. He returns all calls within 24 hours. Okay, so interest rates. Mortgage rates are still, we're doing well. It's 30-year fixed rate, 6.11 as of today, and this is according to MortgageNewsDaily.com. 30-year FHA, 5.69, 5.70 for the 30-year VA. And folks, if you wanted to get a rate even lower than that, you could get what's called a 7.6 adjustable rate mortgage and get a 5.45. Okay, that's a 30-year rate. So that may be a way to get an even lower interest rate. And then when rates drop again, and if it's in a year, 2 years, whatever, you can refinance to an even lower rate. Okay, so one of the things that I've been working with my lender partners with is helping them communicate to not only home buyers but also home owners who may have a lot of debt, car loans, high interest rates on credit cards. Credit card rates can be 25, 26, 30%. That's a big payment every month, and if you were to refinance that into a HELOC or a second mortgage, your payment would drop significantly. Now, of course, the goal is to not reactivate those credit cards at the high interest rates, and then also pay that amount down more quickly on the mortgage. So that way, if you owe $4,000, you refinance it into a HELOC or a second mortgage. Work hard to pay down that $4,000 ASAP, so you're not paying for it for 30 years, okay? But that is another option for homeowners who are looking to save some money to spend their money more wisely. You have a lot of high interest rate debt. Now would be a good time to refinance it, okay? And as I said, rates now, these are purchase mortgage rates, 6.1, 5.45, 5.69, 5.7, but a lot of my lender partners have very low rates on refinancing. Okay, Dave Campagnon over at Bank 5, Jeff Gaccione at Embrace Home Loan, Joe DiBattista at Anchor Financial, Sean Hogan over at Shoreham Bank, and my buddy Lena DePina, she's at Washington Trust. They've got some great programs too. So, you want to think about looking into that. If you have questions, I'm your host, Joe Luca, Luca, 409-5030. You can call or text that number, and I will get back to you ASAP. Again, Joe Luca. I work at a company called Remax. 401-409-5030. Okay, now without further ado, I want to talk a little bit more about what's going on. You know, if you're waiting for the perfect rate or the perfect price, tonight what I want to do is translate the latest inflation, jobs numbers, mortgage rates, and Rhode Island inventory data into practical moves you can make right now. So we're going to go over, the national economy snapshot with inflation, jobs, consumer spending. We'll look at mortgage rates and what the Fed is signaling they're going to be doing. And then the Rhode Island market, still very much a seller's market here with our inventory, prices, and who you may be competing with as a buyer or as a seller. And what to do if you're buying, selling, or refinancing. As I said a moment ago, you want to pay attention to whether it's a good time to refinance some of your high interest debt. Okay, so inflation, why it matters, okay, to mortgage rates. Over the last 12 months, the consumer price index, through December was 2.7%. The core CPI was 2.6% over that same period. So inflation is cooler than it was, but it's not mission accomplished. And that's why rates aren't racing down yet. Now, I read up, someone had posted something on LinkedIn today, someone from Moody's, and I know these are real smart people, but I didn't really totally agree with his interpretation of what's going on with the inflation rate, and he did raise some legitimate points about the consumer spending, the national debt, but we'll come back to that a little bit because I'm going to revisit that with something that Dr. Lawrence Yuen said. He's the chief economist for the National Association of Realtors, but we'll get to that in a moment. Now, jobs in the most recent employment situation report. Payroll growth was 50,000 and unemployment was 4.4%. So this is not a recession signal, but it's not a red hot hiring market either. And this is where I disagree with that gentleman from Moody's who wrote the article in LinkedIn today, because he was seeing this, identifying this as a potential signal for a recession. I totally disagree. I think that we've talked about this in previous shows, that we are in the middle of what's called a K economy right now. Some folks, it's growing and doing well, and they're spending lots of money, and then there are others of us that it's tough, it's challenging. People in the real estate industry, real estate professionals, have generally, weathered the inflation well because home prices had gone up. But the counterside of that is sales were down. The unit sales were down almost 40%. So if you take a 40% reduction in your income, prices would have to go up precipitously for that to be, counterbalanced. So it's still a tough time for real estate professionals, whether it's real estate agents, mortgage lenders, appraisers, home inspectors. There are just, again, opportunities for business. Those transactions are down almost 40%. So, and then consumer spending, okay? This matters to confidence and housing decisions. We've always talked about on the Joe Luca Real Estate Show how our economy is good, our economy is strong if people think it's strong, okay? Now, Reuters reported that in December of 2025, retail sales were flat and core retail sales dipped, suggesting potentially consumer fatigue. Now, when consumers feel squeezed, generally, they get more payment sensitive. So the mortgage rate conversation matters even more, okay? And the thing that, all the gurus tell real estate agents what you're supposed to talk about with your buyers is the monthly payment, not the price of the house. And that's true, because most people, that's what they think about. What can I afford? I'm spending $2,700 a month in rent to pay someone else's mortgage. Can I spend $2,900 a month to pay my mortgage? Do I have to spend less? So payments are, the monthly payment amount is something significant. And of course, when you own the property, you also have to factor in your monthly taxes and insurance. Okay? So, are you worried about a monthly payment, finding a home, or getting top dollar if you sell? Because that tells you what strategy will matter the most in your game plan. So what is the Fed telling us about rates right now? Well, recent reporting by all the major news outlets indicates the Fed is holding the policy rate and signaling patience. Okay, these are based on remarks of Jerome Powell and some of the Fed governors. Reuters quoted a range, of around 3.5 to 3.75%, and quote, on hold for some time, period. Now, Jerome Powell will be leaving his current post in May. I would bet dollars to donuts that the first Fed meeting after that, there will be a reduction, because the guy who was nominated by the president is very sensitive to interest rates. And I just want to take, kind of go to the side for a minute here. The reason interest rates, it's important to get these Fed rates down, is because when the Fed lowers rates, okay, that can affect short-term and long-term rates. Short-term in the sense that you have the debt that the government owes. So if the Fed lowers rates from 4 to 3.75, from 3.5 to 3.25, that, those small reductions, a quarter of a point reductions, that will save the government billions of dollars on our national debt. Don't forget, we have about 38 trillion with a T dollars in debt. So get your calculator out. What's, a quarter of a percent in interest on that every year? How much will that save? So that's another motivating factor why we need to get the Fed funds rate down. Also, it does, it'll make, as the Fed lowers its rate, the rate that it charges to banks, eventually, it's kind of very much a trailing number. The mortgage rates may come down too, because the banks can borrow money at a lower interest rate. But that's not a direct, that doesn't happen quickly. That's more of a trailing result, okay? General trend in reducing rates, mortgage rates will eventually follow. So essentially, the Fed isn't in a hurry to cut. So mortgage rates are probably going to continue to drift. Inflation is declining, but it's not really dropping. Okay, it's kind of gently slowing down or lowering. It's much better than where we were before. Almost 20%. But we need to, as inflation dissipates, mortgage rates will continue to come down. Now, Freddie Mac, they have a 30-year fixed rate mortgage as of 6.11%. Their 15-year is at 5.5%. Now, Freddie Mac is it's a mortgage, it's a government-backed security, and they have some things, the way they do it's a little bit different than Fannie Mae and Ginnie Mae. They can look at savings accounts, they can, bank statement loans, they can also do, drawing a total blank right here on what I was going to say, lost my train of thought. Oh, using your utilities, rent payments, things like that, those can help qualify you for a Freddie Mac mortgage. So we're hovering near 6%. That's not 3%, it's not 4%, but it's meaningfully better than last year. Now, a lot of folks, they had rates that are in the 7.5%, 8% when they purchased a house or refinanced a year or two ago. As these rates get lower, it may make more sense for these people to refinance out of that 7.5% rate to get into something. Now refi rates are a little higher, into a 6 or a 6.25 rate or whatever those numbers are. Okay, there can be an improvement over that now. Now consumer sentiment. The University of Michigan had preliminary sentiment at around 57.3%. That was in February of for February of this year. Okay, so that's improving a little bit. Higher income households feel the improvement first, but many families still feel pinched. That's what I referred to a few minutes ago about the K economy. Some folks, the economy is doing great, it's expanding, they're spending money, refinancing, buying homes, buying cars. Another segment of the economy, it stinks in plain English, okay? So that's like the bottom part of the K, the bottom leg of the K. So let's bring it home. Because Rhode Island doesn't behave like the national average, and now generally, or historically, New England and Rhode Island, we were like the first to go into a recession and the last to come out. But things are a little bit different this time around, okay? Inventory is still the headline in Rhode Island and southern Massachusetts. The Rhode Island Association of Realtors has less than a 2-month supply of inventory. Okay, and I know that for a fact. I'm president-elect for the multiple listing service, and we had an executive committee meeting this morning, and that is the latest data as well. Now this is nationally, that is 3.3 months of supply. So nationwide, the average is about 3.3 months of supply. Here in little old Rhode Island, it's less than 2 months of supply. That's a big difference. So less than 2 months of inventory means we are still in a scarcity mode. Okay, that's something that, as long as we're in a scarcity mode, things are going to be challenging for buyers. Okay, so you need to, just kind of, again, talk with your realtor, pay attention, open the emails that he or she sends you, and see what they're saying about the market, about housing. Look at the inventory, look at the listings that you're being sent. I can't count you the number of people, like I send them emails and listings, and they're not opened. And then I talk to them, and they're like, oh, I haven't seen anything. Well, I send you emails every week. You haven't opened any of them. You're not going to see opportunities to buy a house if you don't open the emails, okay? So pay attention to what is going on in the marketplace, because, sometimes these houses come online, become available, and they don't last long, folks. They don't last long, all right? You have to be ready to strike while the iron is hot, okay? And mortgage rates are not 3%, but they're a heck of a lot better than they were a year ago. So rates may continue to drift. They're not going to be collapsing. What this means is we're no longer in a crisis mode, but it's not in a freewheeling, easy money market either, like we had during COVID. So I just want to point out, waiting for 3% mortgages, that's not a strategy. Planning a payment around current rates, that is a strategy. And I can help you do that. Just reach out, 401-409-5030, Joe, Luca, Luca, your humble host, and we can put together a game plan for you. And the reason waiting for a 3% mortgage rate is not a strategy is because home prices are increasing about, depending on where you're looking in Rhode Island, 2, 3, 4, maybe 5% per year. So if you're looking at a $400,000 house, which is incidentally below the median price in Rhode Island, 5% of that is $20,000. Okay, if you're waiting for 3%, and let's say half a year goes by, before you change your mind, you just lost 10,000 bucks. All right. So again, inventory, it's still the headline. We're still in scarcity mode. This is still a seller-leaning market, even with rates higher than they were a few years ago, especially since they've come down, but some people are still waiting on the sidelines. Now, let's review some year-end data from 2025 from the Rhode Island Association of Realtors. Single-family homes, the median price in December was $496,950. That's $496,950. That's up 5.7% year over year. The 2025 median price overall for the entire year was $499,900. That's for single-family homes in Rhode Island. Condos, $390 is the median price for the whole year. Sales were up 5.8%. Now, that's sales up 5.8%, not pricing. Just pointing out that little shift there. That means the number of condominiums sold in 2025 was 5.8% higher than in 2024. This is increasingly the entry point for buyers. Condos and that $390,000 price point, because again, a single-family home is over $100,000 more for the median. Multifamilies, the December median price was $595,000. That was a 9.2% increase year over year. 9.2% increase year over year. Prices haven't collapsed. They've remained sticky at the very least because inventory stays tight. Prices are not going to come down until there's more inventory than there are buyers. And as I've said for several years now, buyers are not going away. Especially now, real wages are increasing. Yes, there are some questions about the labor market, but even though we have had those questions about the labor market, that has done nothing to dampen the demand for homes in Rhode Island, okay, and southern Massachusetts, greater Boston area. So I love it when people say, Joe, I'm just going to wait until the market corrects, till prices come down. I've had people who have been waiting for prices to come down since, I think, 2016, 17, and they've doubled. They've doubled. And now rates are higher than they were at several points since then. So, I was talking with my CEO today at Multiple Listing Service, and, he's been with us now for a little over 10 years. And he was saying, he goes and works with different realtor associations across the country. And he said, every time I go someplace, I buy a house right away because the market never declines in the long run. He said, I bought a house in Rhode Island 90 days after I moved here. And he said, my house is worth almost double what I paid for it. He said it was a very, very good move. He has the benefit of experience and perspective. He's a native New Yorker. He's worked in Arizona. He's worked in California. Every place he goes, he buys a house right away. So then when he sells it, he knows he's going to have a lot of accumulated equity. So prices haven't collapsed. They're not going to collapse. There are more buyers than sellers. We're still not building enough houses or anywhere near what we need to build. So we're going to be in this predicament for, I say, the next 5 to 10 years. Okay. Now, who is your competition if you're buying a home? We're still seeing a lot of out-of-state buyers, okay, because it's a lot less expensive to buy a home in Rhode Island than it is in Massachusetts. And vacation home down near the beaches is a lot less costly than buying a vacation home on Long Island or in one of those ritzy places in New York State or Connecticut. So 22.5% of Rhode Island residential sales involved out-of-state buyers, plus a good portion of, or a portion of those, I don't know if it's a good portion because I don't know that we track this, but are folks buying homes for their college student children. Okay, I sold a home last year. It was a family from California, and they had bought a single family home with a lot of bedrooms for their son while he was going to school here, and then they sold it when he graduated, and they made a chunk of change. Okay, so a portion of that 22.5% is probably parents of students at Brown, Johnson & Wales, Providence College, Roger Williams University, URI, Rhode Island College, etc., etc. Also, for the homes over $1 million, okay, this would be, fancy houses on the water, big houses, 41.1% of buyers were from out of state. So if you are looking to buy a home that's over $1 million, you may be competing with someone from out of state. Something to bear in mind. And there are also some institutional buyers, but I have to say, anecdotally, I haven't seen that. Like the BlackRock and all those other companies. I haven't seen those folks. I mean, maybe there are local individuals, companies owned by local people that are buying homes. So I have, if I own, Vinnie Boombat's realty company, and we own investment properties. That would, be a corporate purchase. Would that be classified as an institutional buyer? So I don't know how they're, classifying this. But I just want to point out that your competition, it's not just neighbor versus neighbor. Sometimes you're competing with people from outside of the state. Okay? Basically 1 out of 5 buyers. All right? So a lot of times these folks who are coming in from out of state have more cash. They're less rate sensitive. Okay, so if someone's selling a home in Boston and looking to buy something in Providence, they probably have a ton of equity. So they have a lot of cash, and they're putting that cash, a good portion of it or all of it, down. They may not care about the interest rates. Okay, but I can tell you if they're putting a big chunk of cash down, they're going to have a much lower rate than someone who doesn't have a big chunk of cash down. And many times these buyers can move more quickly. Okay, because sometimes if your credit is strong enough and you're putting enough down on the purchase, they can waive an appraisal. Maybe the buyers would be willing to waive an inspection. So that really shortens the time period to go from accepted offer to closing. All right. And now, I want to just also talk a little bit about renting versus owning pressure. Okay. Lending Tree did an analysis highlighted by Axios that shows a large rent versus own gaps in many metropolitan areas, Providence is included. Rents stay high while prices stay firm. This gap makes saving a down payment more difficult, while prices stay sticky because inventory is tight. Now, I want to just talking about rent. I'm going to put a pin in that for a moment because we're going to come back to talk about rent and rent control and some other subjects later on in the next several minutes. So what do you want to do now for buyers, sellers? For homeowners, do a refinance watch. Talk to lenders. Again, give me a call. I will recommend my preferred lenders. They do a great job. They're honest. They're knowledgeable. and they handle my clients phenomenally, but you've got to reach out to me to get their contact info. It's Joe Luca, 401-409-5030. Shoot me a text or call. I'll get back to you within 24 hours. Now, buyers, you have 3 non-negotiables in today's market. You need to get, for underwriting first, you need to get a full pre-approval, not a casual pre-qual that you get from some national or institutional lender. Because, listen closely, this is important, certainty wins offers. If I send an offer in, well, I wouldn't send an offer in with a pre-qual, okay, number one. Number two, if someone sent an offer in with a pre-qual on one of my listings, I would send it right back and say, you need to get a full pre-approval. Otherwise, your offer is not competitive with other offers. And that's why it's important to work with a great lender, because there are some lenders who have a better reputation than other lenders, okay? These individual loan officers and the institutions themselves, okay? It's pretty much widely known in the industry that a lot of the large institutional nationwide lenders, they're not very efficient. Things can drag out. You would think that because they're so big, they'd be super efficient, but you know, they're not. So it's important to have a good loan officer working for a good lending company, and that's why listen to your buyer's agent, your realtor. Again, I've talked about this in the past, if I receive an offer and it's from a lender that I know is crappy, or it's from a lender that I don't know, I'm going to call the agent up and say, listen, I had a bad experience with this person before. Why don't you get your buyer pre-approved with another lender, because they'll have a better shot. You know, or if it's someone I don't know, I will call that lender up, have a conversation, ask them specific questions about how they, you know, pre-approved this person, and see if they did an adequate job. All right. All of the lenders that I work with, and I kick their names around quite a bit: Joe Baptista, Sean Hogan, Jeff Gaccione, Dave Campignon, Luis Rondon at Semper Loans. All of these lenders do a great job pre-approving their buyers, my clients. Okay, so again, certainty wins offers. Number 2, offer strategy beats emotion. Base your decisions on the property condition, the days on market, not on fear of what's going on in the headlines, not what, you know, your cousin or your father or your, you know, uncle or grandparents said. You want to look at real data, and that's what you base your decision on. Next, an inspection strategy. Okay, I never advise any of my clients to waive an inspection unless they are a contractor who tells me that they can handle anything. Great, because a contractor, a construction person, they may not know what to look for. A home inspector has been in thousands upon thousands of homes and seen almost everything. Now, in Rhode Island, unfortunately, they aren't allowed to open up the electrical panel anymore, but you could bring in an electrician to have that inspected. But a home inspection is an opportunity for you as a buyer to protect yourself. It's also an opportunity for you to stay competitive. And if you're a seller, you may want to consider getting a home inspection as well, so you can provide it to any prospective buyer and say, hey, this home is certified. Say, you know, we have a home inspection. It's already done for you. So you can save $500, $600, $700, $1,000 on a home inspection, and you get to see everything about the house right here. There is no blanket advice to waive safety. I cannot give, nor can anyone give any advice that would waive safety. Okay? You need to have a very good understanding of what you're getting into. Now, you may go in and say, oh yeah, the boiler doesn't have a lot of life. Oh, the roof is at the end of its life. At least you know what you're getting into, so you can plan for it. All right, I'm gonna have to spend 15,000 bucks on a new roof, 18,000 bucks on a new heating system, this much on that. Great, I'm getting the house $100,000, below fair market value for, a remodeled house. Okay, at least you are going into the transaction with both eyes open, and you are aware of what the house is going to require. The next thing that's important that I like to do is, payment framing. And I do this in conjunction, in partnership with my lender partners. So you can say, well, at around 6%, the monthly payment is the decision driver. So we shop the payment first, then the house. Okay, so this house here, it's a 3-bedroom, 2-bath house, 1-car garage in this same neighborhood or in this city or town. This is what it's going to cost. This is what your monthly payment would be. And that includes taxes. In this town, this house, blah, 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 this is what your monthly payment would be. And we can expand it by property type. That's why many times people find that condos and townhouses are an on-ramp to owning a single-family home down the road. Okay. Now I had a townhouse, and in 6 years from when I sold it to when the buyer sold it, she realized almost a $200,000 increase in value. So condos and townhomes can be a great opportunity to be an on-ramp to home ownership, single-family home ownership. Now, part of the strategy that I work with my buyers and my lender partners with is try to see, is there a way to structure a deal, to structure the financing, to make it a win-win for buyers and sellers. Okay. Temporary buy downs, okay, may be an opportunity, whether the buyer pays for it, or if we can ask the seller to contribute towards that. That way it's easier for the buyer to buy the house. Now, things that come into play when deciding on what strategy to use are days on market. Where is the house? If it's a house it's in North Providence or Johnston, where there's always a consistent amount of demand, that's very different than if you're trying to sell a house that's way out in the middle of nowhere in Burrville, where there's a lot less demand. Okay. So that's something I would have that conversation with temporary rate buy downs with my lender partners. I'd also ask them about lender credits. Okay, this is something that's important because some lenders can credit you money on the purchase of the home. There are some lenders out there who have grant money that may be available, and it's not Rhode Island Housing. This is separate from that. So again, I have great relationship with a lot of my lender partners, so I have access to some phenomenal mortgage programs that I direct my excuse me, I direct my buyers to these programs based on what they're looking for. If you're a first-time home buyer who's looking at a condo, in one price point, or you're a step-up buyer or a downsizing buyer, or you're looking to buy a multifamily, then we'll probably direct you to another lender. If you're looking in Providence, Pawtucket, as opposed to Cumberland, Smithfield, we may have a different lender for you. Okay. We'll, target homes that are clean, that don't need a ton of work. Maybe they're a little bit dated. Okay, maybe you have some 1985 cabinets, but there are things you can do to update those that aren't going to cost you an arm and a leg, and you'll be able to get into home ownership or condominium ownership. That's the ultimate goal. If you make the decision, okay, so we sit down, we're talking, you're like, Joe, I want to rent an apartment or a house. Well, what's your budget? Well, I can spend $2,500 a month. Okay, let's see if there's a way that we could structure something so you could buy a house for about that much money. If we could, would you be interested in buying a home? Instead of paying the landlord's mortgage, pay your own mortgage? Yes, no. Okay, let's see. If you say no, not interested because I'm going to have to move back to California for graduate school or to be with my family in a year and a half, blah, blah, blah. Okay, that's a different story. But we'll have these conversations so we can work you to find an opportunity so you can become a homeowner. And when we have these conversations, we develop this relationship ahead of time. It's kind of like trust and loyalty. You trust me, and you're loyal to me. I trust you and what you're telling me, and I'm loyal to you. That generally creates a successful endeavor. And it also removes the emotion of buying a home because there's less uncertainty. And that's part of my job, to educate you so there's less uncertainty. Because, as I say every week, when it comes to real estate transactions, surprises are never good. Surprises are never good. Maybe because if something positive did happen and it were before closing, it wouldn't be good for the buyer, it would be good for the seller. If you found $1 million in a tin can in the basement, unless it's after closing, it belongs to the seller. And even after closing, you may, if you tell the wrong people, you're not going to be able to keep that money. Of course, then the next question would be, well, where did it come from? Was it stolen? But let's put that aside for a minute for my example. So, we want to pay attention to all of that and listen to and I don't want to sound too much like a teacher, but I try to educate my clients so that you're not nervous, so that you're confident in your decision making. Because if you're confident in your decision making, there's less stress. Folks, you're listening to the Joe Luca Real Estate Show right here on WNRI 99.9 FM, 1380 on the AM dial, and of course WNRI.com. I want to thank our sponsor, Compass Title and Escrow. Anthony Betancourt does a great job taking care of our buyers and sellers of commercial and residential real estate. Okay, they do a fantastic job taking care of them. And also Vern Rainville. Vern Rainville is a licensed insurance adjuster. He's a public insurance adjuster. When he's a public insurance adjuster, he's licensed by the state of Rhode Island. That means he works for you, the property owner, not the insurance company. Public insurance adjuster. Give him a call. You're not sure if you have a claim or not, he can help you out. Don't call your agent because that could become a black mark against you. Give Vern a call, 484-300-8495. Again, 484-300-8495. All calls are returned within 24 hours. And Vern Rainville will not steer you wrong. So please give him a call if you think, even if you're not sure, if you think you may have a claim. And he'll give you the skinny. Okay, he's been doing this a long time. Now, sellers, some mistakes you want to avoid in 2026. Number one, we talked about this last week, pricing. You don't want to price your home like it's peak market frenzy while ignoring competition and the condition of your home. You want to balance. You want to have a balanced truth. There's less than 2 months of inventory available in Rhode Island right now, and buyers are still payment sensitive. So if you push your price too high, the market is going to may prove you to be a little greedy. A quick seller checklist. Get your pen out. Write this down. As I mentioned earlier, an optional pre-listing inspection. These are things that would facilitate a sale after you go under agreement. Could be an enticement for it to go under agreement. You want to have a clear first 7-day plan with your listing agent, hopefully me, 401-409-5030, your humble host, Joe Luca. You want to get photos taken care of, have showing windows set up, offer review timing. High ROI improvements, whether you're going to be painting, adjusting the lighting. Folks, get rid of dim lights, no energy saving lights when you're marketing your home. You want it to look good. Even if it's not a perfect house, dim lighting makes it look dingier. Okay? Bright lighting is important. Because again, people, if they don't see it well, they're going to imagine it to be worse than it is. I guarantee you that. Curb appeal. Very important. So talk to your realtor, your listing agent about what to spend money on, what to do to maximize your curb appeal. And then of course, decluttering. Now, it's always nice if your garage shows nicely. It's not full of stuff, but if you have nowhere else to put it and you have to declutter the house and put everything in the garage, that's a better choice than leaving it all in the house. Okay, so those are a few things that you can do if you're thinking about selling. Start the process early. Declutter first. Okay, give me a call if you have questions about what to spend money on to increase your curb appeal. 401-409-5030. Call or text and I'll answer you. You don't have to list your house with me. I'll give you the information for free. Okay? Now, if you're a homeowner, you don't think you want to sell your house just yet. Maybe you want to do some repairs. Maybe you just want to reorganize your finances. Establish a refinance watch planning program. Now, the Fed has been signaling patience. Mortgage rates are hovering around 6%, FHA, VA below, conventional a little bit above. If you have a rate, this is something like what I call trigger-based planning, not guessing. So if you have a rate at 7% or higher, talk to one of my lender partners and determine what is a good break-even number for you to finance at. So let's say you have a rate of 7.5%, and based on what you're paying, if rates get down to 6.4, it would make sense for you to refinance. So if you could refinance your current mortgage at 6.4, you'll get an alert. Or you total up all of your car loans, credit cards, student loan debt and everything, and how much is that monthly payment per month? And if you were to refinance into a second mortgage or a HELOC, how much would that go down? Where would rates need to go to make that a yes decision? Put together a plan and get some triggers. But you need to have a great lender to work with, and I can certainly refer you to some awesome lenders. Just give me a call and I'll ask you some questions and then give you the guidance to work with the correct one. That way it's like, all right, if rates drop 1.25%, it makes sense for me to bundle up my car loans, student loans, and all these thousands of dollars in 30% credit card debt and put it into a second mortgage. But we have to have the conversation first. This isn't about predicting rates. It's about being prepared so you can execute when the situation is right for you. And that's one thing I communicate to my buyers and my sellers. It's all about you. Maybe it makes sense for you to sell your house right now. Maybe it doesn't. If it doesn't, I'm going to tell you, no, it doesn't make sense for you to sell your house right now. Let's sit tight and figure out something down the road. I had a listing appointment last week. He wants to sell. She doesn't. She has some concerns. They're legitimate. I'm not sure that they're going to be able to sell the house that they have and buy what they want as easy peasy as they want it to be. And I told them that. I said, the first thing you need to decide is if you definitely want to sell. If you want to sell, then we can see if it makes sense to sell. Okay? Maybe it doesn't. I mean, if you say, I have to sell this house, Joe, list it, okay, great. But if there's some uncertainties, or you ask Joe, is this a good time for me to sell? Should I? That's something else. Okay? So again, this isn't about predicting rates. It's about being prepared for the best situation for you. Now, if you're stuck, where are you stuck? You're stuck finding a home, affording the payment, competing with other offers. Give me a call, 401-409-5030, or send me a text message. Are you a first-time buyer? Are you downsizing? Are you looking to buy a multifamily to offset the payment so you can live for free? Give me a call, 401-409-5030. If you're selling, what do you think your home is worth? What are you comparing it to? Okay? You can't compare a house in zip code ABC to a house in XYZ that's on a better street in a better neighborhood that's in better condition. Just because they're single family homes, it's apples and oranges. Okay? Folks, you're listening to the Joe Luca Real Estate Show right here on WNRI 99.9 FM. I just want to wrap up with something Dr. Lawrence Yun that he posted on LinkedIn. And I think this is kind of buttresses what I just talked about for the past 50-something minutes. Mortgage rates are nearing 6% average rate, which means a 3-year low. They could even go further down, not to 3 or 4% of the COVID bonus interest rates, but to say 5.8 to 6% if the Fed Reserve further cuts its short-term Fed funds rate later this year. They're generally predicting they will. The prediction bettors market is anticipating 2 or 3 more cuts from late spring. That would be after May with the new chair of the Fed. Even though the mortgage rates do not follow one-to-one with the Fed's monetary policy over a longer time, mortgage rates tend to directionally follow the Fed's decision. But a big risk to this assessment is the record high national debt driven by continuing large annual budget deficits. More government borrowing means less capital available in the private sector and less available funds in the mortgage market. So, mortgage rates may not decline with the Fed Reserve cuts. Moreover, if the nation's debt issue, including Social Security Trust Fund, is not addressed, and with no changes to existing policy, Social Security checks will automatically be reduced by about 20% after 2033. That's something I was not aware of. So folks, that's the end of the Joe Luca Real Estate Show. Stay tuned next week. We will be back. Same bat time, same bat channel. Bye-bye.